Bill, good morning. Happy Monday. Happy week. What is to you the most important thing now? The Fed's kind of behind us. Trade war's been going on now for nearly 2 years. What is the most important thing to you and your team to focus on right now?
Well, I think probably the trade wars versus the trade truce would be the biggest issue. Are we going to get a trade deal, or are we just going to get a trade truce? And could we even get an escalation of tariffs from here?
Now, why does that matter to the credit markets, and how do you see it affecting the markets going forward?
Well, I think certain parts of the credit markets are starting to price in a trade deal, which I think we see very little evidence of that. We are seeing evidence of a trade truce, but even that could change at any minute.
So what do we do? Given that, what's the best move for your clients and our viewers right now?
Well, I think you have to stick to your late cycle playbook. You have to be prepared for an escalation of tariffs, which would have a very damaging effect on the U.S. economy. It's already putting Germany into recession or very close to recession. It's having an impact in China. If it has a negative impact on the rest of the world, it's certainly going to come back and affect our economy.
Do you see the economy slipping into recession in the next year or so, Bill?
I mean, I think we're right on the cusp of what the government bond market is telling us is that we're right on the cusp of a high risk of recession or this mid-cycle adjustment, as Chairman Powell likes to refer to it.
You know, we look at the markets now, we say, okay, the bond market may have done the work for the Federal Reserve. I mean, they were way ahead of the curve. We're all waiting on the Fed, Bill, and as you know, obviously, we saw yields come way down. They've come back up to 1.7. That's still a lot lower than most people a year and a half ago would have thought where we would be right now. Do you see us kind of hanging around these low interest rates for the foreseeable future, or is there any way that we could pop back to 2, 2.5, even 3% on the 10-year?
Yeah, I think 3% on the 10-year is a real long shot, but 2% on the 10-year would be interesting if the 2-year stays around the levels right now. That's kind of how I would draw the line in the sand for whether we're talking about the risk of recession versus this mid-cycle adjustment. A 2-year, let's say 175 or lower, but a 10-year more like 2%. And right now, the yield curve is still just barely positive, maybe 3 basis points between the 10-year yield and the 2-year yield.
You're in Columbus, Ohio, so I'm going to leave it with probably the most important question you've ever heard. How badly will Ohio State beat Michigan this year? Because Michigan's not good.
I don't want to comment on that, but we did have a great come-from-behind victory against Miami this weekend.
Oh, yeah, you really, those Red Hawks, they really put it to you guys. What was it, 73-5?
We were sweating it out. We only pulled ahead by 71
I got to be careful. My
points.
wife went to Miami of Ohio. I need to just watch what I say. I don't know if she's watching the show. Bill, thank you very much. We appreciate that.